My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, BobMortgage Nation? This is the 70th episode of the Mortgage Report. That's right, I've been delivering these mortgage reports to you 70 weeks in a row. Now, what a mortgage report is basically me being able to give you feedback as to what's happened in the market last week and what we kind of see the current state of the market is and what we are projecting next week to look like. Now, I'm giving you my lock position in this mortgage report, but it's for the week. So what I also advise you to do is go over to Instagram. Go to instagram.com/BobMortgage and follow me, because in the stories on a daily basis, if anything's changing in the market that would influence the lock or float position that I gave you on Monday, then I'm going to make sure I update you guys in stories. So head over to instagram.com/BobMortgage. All right, so right now what we're seeing from last week is we got a lot of news out there regarding the 10-year and the 2-year yield. And so why the 10-year and 2-year yield is important and why it's a hot topic right now is we're getting pretty close to a flat yield curve. I mean, the spread between the two is at the lowest we've seen in a long time, about 22 basis points. And what happens if we get into a inverted or a negative yield curve, then that is pretty much a pretty solid and indicator for recession. So we have to be very, very careful as we're leading into more interest rate hikes. And yes, we do expect 2 more interest rate hikes this year, one in September and one in December. Now, each hike will reduce that margin or that spread and get us close to that flat or inverted place. So it's going to be a hot topic that I know the media is going to be talking about, that the Fed is going to be watching, and of course that I'll be watching, because that does put a key stress level on mortgage bonds and could influence whether I'm telling you to lock or float. Okay, so in some economic news, initial jobless claims, which measures individuals filing for unemployment benefits for the first time, showed that there were 210,000 claims last week. Now, this represented a drop of 2,000 from the previous report and shows that the labor market remains extremely tight and employers are holding onto their workers. Now, if we kind of watch this a little bit more and this continues that trend, we're going to start to see wage pressured inflation, and that's not going to be good. Now, new home sales numbers were also released last week. Now, this measured signed contracts on new homes. Well, numbers reveal that it fell 1.7% in July to a 627,000 unit annualized pace. And this was worse than expectations. The market was looking for a 2.2% increase. Now, if you go back and listen to like mainstream media right now, you would think that new home sales, the housing market is crumbling. But if you really know the numbers and you look back, new home sales have actually been increasing year over year at about 12.8%. So we go into Friday of last week, and Jerome Powell came out and had his speech talk in Jackson Hole, Wyoming. And he said a lot of things. One of the things was he definitely sees more rate hikes in the future. But here's some things that he also talked about. No risks of the economy overheating. He does not see that at all. That the economy has strengthened substantially and expects strong performance to continue. Now, regarding inflation, he said that the Fed will do whatever it takes on inflation and sees no signs of inflation accelerating above 2%. And regarding risks, though, the risk he sees are slow wages and that the federal deficit is on an unsustainable path. So those are some big comments, and we got to watch a lot of that stuff because he's definitely keen on increasing interest rates, but some good things about watching inflation, because we do not want to get into an inverted or negative yield curve. Now, what are we looking at as it relates to mortgage bonds right now? Well, as you can see, we're sitting at about 101.97 on our Fannie Mae 30-year bond pricing, okay? But if we come down here, these are some of the things that I really want to point out, okay? This is the top line. This is that resistance level, that overhead level of resistance I've been talking to you guys about for some time now. And you saw the trends all the way back here. We looked in the last mortgage report that we talked about. We have not broken above that 102 ceiling of resistance in some time. This was back in July. We touched on it a little bit early July, but we fell right back down. And we've been pretty much holding there all the way through June. This is June of 2018, right? So where are we right at this moment? We're still at right at that top end of that 102 mark. And every time that we've touched it, we've fallen back down. And even on Friday, we had some great bond-friendly news with durable orders. They got hammered. And that right there should have sparked a pretty nice rally, which could have taken us above and made it above that 102 mark and given us a nice run up. But because of Fed Chair Powell's comments regarding increases in interest rates coming up in September and December, we just didn't get the rally we were looking for. We bounced right back down, and now we're trading again, like I've been saying, in that sideways trading range. So bottom line, guys, right now, I am carefully floating, okay, just because we're in a nice sideways trading range, but I am watching it very, very closely because I do not want to see us trend down any further than, in that 101.77 to that 102 mark. I kind of want that to be our sideways trading range, which would be good for interest rates. Of course, I'm watching it to see if we get any other news that could put us above that overhead level of resistance. So right now, carefully trending. Bottom line, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily to make sure I can get you the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.